Okay, so hey everybody, this is Sean from Invest to Live. Here's another episode of our sneak peek for the week. We're actually moving along pretty good here, and we've got a lot of good feedback. So for what it's worth, I'm going to keep doing these. I think kind of providing a little context and a little thought around what's coming up for the week has been helpful. As always, we really appreciate when you hit the like button for us, and if you're not subscribed, please consider subscribing. I will say, on a funny note, two things have happened that are really good, and I'm going to jump in, and some of this is a little more somber than normal, but I think it's important to mention. First of all, surpassed 500 subscribers. So wow, I can't believe it. Honestly, um, I really was just doing this in the beginning just to sort of talk about some of the experience I have, what I do out in the markets, what I'm seeing, my take on things. I think everyone who watches me on a regular basis knows I'm really heavy on ensuring you have balanced portfolios. There's room for speculation, but understanding hedging, understanding risk, understanding how we assess and manage those risks. But wow, 500. I mean, I feel like a celebrity. I know maybe not that big of a deal to those with millions and millions, but hey, I really, truly appreciate it. And, it means a lot. And the other thing too is the like button is really appreciated. I get blasted with thumbs down on some of my videos. I don't even know why. But I noticed they all seem to hit like right away, all from the same part of the world. And then I tend to not get any more. So I don't know what's going on there. But hey, I really appreciate getting the like button pushed. So thanks so much for doing that. Then the reason I say this is going to be a little bit more somber than normal is, really on my last Sunday night, I had mentioned what was going on in India and our friends in India, and just sort of the struggle that's going on there from the COVID perspective. Things are really still out of control right now. We're hearing some just frankly really sad stories, and I think that it's important to understand how things like a pandemic, how global events, both good and bad and terrible, can affect the markets, both macro and micro. How they affect the way we look at our portfolios, how they affect how the markets move. I think that we're all people at the end of the day, and money's really not that important in how we make it and manage it. It's nothing compared to making sure that our neighbors, our friends, our peers, just people of the global sort of world are really doing okay and healthy. And so I just wanted to kind of kick this off and say, and I'm a really genuine person. I mean this sincerely. I feel terrible for all of our friends in India. I really wish my best to everyone over there, and hope we find a way to get through it all. Sounds like a lot of large companies and governments are stepping up to try to help. I've seen some pictures and I've seen some things coming out of there that just look heartbreaking. No politics is always here. We're never going to talk about that. We don't bring it into this at all. But I think it's just worth noting, if you think about it and take a step back, there's things to be aware of, and it affects us from an investment perspective. And I'm going to talk about that a little bit, what I think and what I'm seeing. But I just really want to start off and say, to anyone who is, from that community and the global community, just, I think all of us here are wishing you well, and hope we get through it. And, if you're affected and your family's affected, really our heartfelt wishes go out to you, that to hope everything turns out okay. So, please just make sure if you have any friends in that community, see if they need help and what you can do to help. And I'm doing the same on my end as well. So, let's jump into it on that note, because I think it's important to cover a bunch of topics tonight. So one of the things, sort of in this skew of always managing risk and understanding downside, I think that with everything going on in India today, in that general part of the world, I think it's important to understand from a macroeconomic perspective what this means. And I think this is more of an example I want to use than a specific case study. We talk a lot about managing portfolio risk and hedging, and how we look at what's coming up in the week ahead. So that's what I want to do here. This is a good practice to get into on a regular basis as you're thinking about the way that you invest, the way you go to the market, the way you look at how you want to understand situations. India is a major trading partner for the entire world, frankly, in a number of categories and a number of ways, both from products and goods, but really services as well. Super talented and strong workforce in the IT space, very services dependent for the world, heavy consulting. A lot of times when we think about onshore and offshore, especially in the US, we have many tech developers who are onshore, aka locally based here in the United States. When we think offshore, typically we're thinking, India based or near thereabouts. So these are things to start thinking about as an example, that when things like this situation happen, where there is a disruption due to something as terrible as this, it doesn't just affect those people who are directly affected, or just perhaps we think of it in terms of being very selfish and saying, well, I own XYZ stock that has a big exposure. It's so much more than that. As I was thinking about what's coming up in the week here, as the situation sort of grows uh, more dire and more serious, although it looks like we're maybe getting some headway and there's some help coming. I think it's important to think about major partners in the world that are also there, right? Like as we're seeing this hit India and that general region, are you exposed to Australian companies and stocks, China, Japan? What does the situation look like for them? These are major trading partners in that region. So that Asia Pac sort of realm of the globe, if you own companies that are doing major business there, transportation, technology, just general exposure, I think these are moments to start to understand what that risk looks like. And I think it's a good opportunity as well when you're thinking about how you're managing what's coming down the road, what's up ahead for the next week, 2 weeks, month, 6 months, whatever it might be. I think it's really important to understand at scale that it's not enough to spend a few minutes thinking about what could go wrong. You have to understand a total perspective of the risk profile of where you're putting your money and how you're managing it. And I know I harp on this a lot, and you hear me talk about it all the time. And I'm going to keep talking about it, to be frank with you. This is where you have to really dig in and understand. Here's my exposure from a downside perspective, a global perspective, a geopolitical perspective, a what would happen if a supply chain issue came up. So I'm going to end it there, just because I think there's a lot going on in the world on this front. I think these are opportunities for a lot of people for the first time, really, to see a major global macro event that could really have a huge impact in a lot of different ways. So let's sort of rotate by talking about rotation for a second, because I think this is another thing that we're starting to see. And I want to be clear here. I never recommend stocks, and I don't recommend direct maneuvers. I really recommend the knowledge base. Hey, what's up, man? Good to see you. My friend Debt Free Dad over here. By the way, awesome channel. Definitely check it out if you're going to be watching this. Doing really good, man. Thanks for checking in. Great timing too. We're just about to start talking about this idea of tech rotation. So I think this is really important going into the week here. We've seen a lot of earnings come through. We've seen a lot of stock prices starting to move like crazy. And I think the point I was just making really is I'm not concerned so much about this idea of, picking this stock versus that stock, or one index versus another. It's really about the idea behind it and understanding why things happen the way they do. So one of the things to look out for, especially if you're new to the world of investing and trading, is this idea of a rotation. So a rotation is this idea that money, big money, institutional money, major brokerages and firms, hedge funds, right? When they rotate out of a sector, there can be a lot of people left in the wake behind them. So let me explain what this means. We've had a ton of earnings come through. This is when money has the potential to start rotating out of a sector, think tech, and into another sector, perhaps finance, financials, whatever the case might be, right? Retail, and so on and so forth. So start to think about, how do those earnings come out? Who are you exposed to within your portfolio? What does that exposure risk look like? Are you hedged against a downside on it? But more specifically now, let's talk about the flip side, right? Protection is key. We have a break in our car. We want to make sure we have stop losses in our portfolios. But if we think that a rotation could happen, especially a rotation in a big way, especially the kind of money that's in tech, what I want to start thinking about, where I do my research, is, well, where's that money moving towards, right? If we know people are going to be leaving tech and they're going to start to rotate somewhere else, I want to know where it is, get ahead of it, and look for the best options I can in that marketplace. So that's something I would definitely give if you're thinking about homework as you're going into the week here. Just start to really take a second and say, well, look, if I was going to move money out of tech, where would be the next best place to put it? Where are the opportunities? And or maybe where are the safe bets now while we still continue to figure out what earnings look like, what the impact of COVID is, and just generally how that's going to affect that macroeconomic or geopolitical piece of this world that we're in right now. So the other thing I want to call out, sort of along the same note, is we were talking a few weeks ago about the Suez Canal being shut down and the global impact of that, billions and billions and billions of dollars a day. Well, one thing we keep hearing about is this chip shortage, right? So car companies are seeing issues. They can't get the chips they need to build their cars. Tech companies are seeing issues. They can't get the chips they need to build their technology. This is another great example of understanding what happens if something fails along a supply chain. This could be very much right at that factory, that manufacturing level. It could be before it, getting your hands on silicon and those base metals that you need. It could be the actual shipping and moving of these components. But either way, this is why it's so important to understand the kind of risk you have at the table across your entire portfolio. And I know I'm beating the drum hard tonight, but I think the one thing that scares me when I look at the way a lot of people I personally know, especially things I'm seeing on YouTube lately, is it's all about like, hey, where's the next 10 bagger? How do I make a 100% return in 2 weeks? How do I jump into a crypto that's worth a millionth of a penny and get it to a penny? Cool. Listen, I get it. Everybody wants to be rich and you want to hit the lottery. And even Powerball has a 1 in 175 million chance of winning, and someone always seems to win every couple of weeks. So my point isn't that you can't win or that you can't win big. But my point really is the basis for a long-lasting, stable portfolio that drives you towards long-term wealth, whatever that looks like for you in your own picture of investment success, it doesn't happen with nonstop 100% returns. Those are awesome. They happen sometimes. It's amazing. But be careful. That's not how you build a true portfolio. And I know that that sometimes isn't popular to hear nowadays, but as you're thinking about what you're going to do in the weeks ahead and the days ahead, even the hours tonight, getting ready for the morning if you're a trader, really try to bring it back to that focus of the macro level, right? So a few things we talked about today. We talked about what's going on in India, which is a very sad and very tragic situation, the way that impacts from a geography perspective around that region of APAC. We understand supply chain issues with chips and how we need to look at our portfolios from that perspective as well. And we also talked about rotation, the way stocks can rotate, especially after large earnings or if there's profit taking from institutions and hedge funds. The other thing I want to just call out before we call it a night here is the crypto space. I sort of never really intend on talking about this, but it just is such a big thing right now. I think it's worth throwing out there. We're seeing all-time price highs again in Ethereum. We're seeing Bitcoin starting to push up and towards that 60 mark again. We're seeing Doge continue to stick in the high 30s right now, or at least last time I checked, it was just under 40. It's exciting. It's great to get in there and make a ton of money. And I think that a lot of people are trying to do that, and it's getting more and more popular. And we're clearly still in the very front end of that. But the reason I always call it sort of speculative capital is that's sort of where I fit it within my portfolio, right? I have a core portfolio and then a piece of it towards speculation. That's where I throw my alternative assets. That's where I throw my crypto, things like that, as a percentage of my overall port. Now, if those pieces blow up, that's great. Hey, good for you. Keep holding and do your thing. But specifically as it applies to news coming up the next week, I think one thing that's really actually worth putting out there, if you haven't heard, is Elon Musk is going to be on Saturday Night Live. I think both myself and many pundits out there believe he's probably going to mention something about either Doge or Ether or Bitcoin or something in the crypto space. And it's a big question of what's going to happen. Will it spike? Will it not? So I want to say this. Sometimes I might seem like I'm very risk averse or very conservative. Hey, I'm in the crypto space too. It's a piece of what I do. If you think what Elon's going to go on there and do is going to cause a big spike, jump on in. But it doesn't mean you can't put a stop loss in so that you don't lose more than you have, right? You can always find a way to protect yourself and always plan for that. My final point, and I call this out all the time, even though we're currently looking at Asia Pacific stocks right now starting to slip, specifically Australia, it looks like we're going to see a slip on the markets. We are, as of right now, as the last time I looked at it, we are seeing stock futures slightly up in the US. I'm not too surprised. We had kind of a rough day. Apple got hammered. A few others got hammered. But something to be aware of for the week. So debt-free dad. I appreciate that. And I'll tell you too, this is funny you mentioned the 1 to 5%. I typically look like 5 to 10 for my total alternative asset piece of my spec portfolio, but agree with you, like 5% for crypto is kind of where I'm at generally. I would be I would be stunned, man. I would be stunned if we didn't hear something about Doge. I might be more surprised by that than anything that happens this week. So hopefully you and I will do well on that. We can maybe collaborate on that one after. I'm gonna keep this one short tonight. Well, I guess 14 minutes is not too short, but I want to stress it out there as always, right? Like, know your risk portfolio, know the risk in your portfolio, know how to hedge against that risk, be aware and always be learning of like how the macro works, right? Seeing a report that comes out and reading something on Alpha or you watching something on YouTube, that is not research. Research is reading investor presentations. Research is understanding how supply chains work. Research is understanding how macroeconomic events affect parts of the world in different ways. So, get serious about this, take it serious, understand how to protect yourself and grow like crazy. And let's just build some wealth here together. There's plenty to go around. And I want to end one more time. To all of our friends in India who are going through a real tough time right now, we send our best out to our friends there, really hoping things get better. It's such an unfortunate event. So, this week you'll be on all of our minds here. And short of that, thanks so much for watching. And Debt Free Dad, if you're not checking out that channel, my man's got some really good stuff there. So definitely check him out too. Thanks for watching tonight. Have a good week ahead on the trades.